Good morning, everyone. Good morning, ladies and gentlemen, and welcome to another live here at MarketMinds Mastery. How's everyone doing today, guys? Is everyone all right? So, I think we are ready to get started. If you have any questions, please make sure you type them on the chat. And yeah, so the first, let's start with the USD Canadian dollar. It's on the watch list. Yesterday we took a trade on the 15-minute chart. It was this one here on this ascending triangle breakout to the upside. So that was a long position of the breakout with the low of this swing used as the, here it is, used as the stop loss placement. Here it was the entry, and 2 to 1 we were out at this doji candle at the top. So of course I didn't stay until this move on, because we don't know in trading when the move will be over, correct? So that was the pretty much the only trade I took yesterday. Today, based on the daily chart, the price touched this resistance at R1. It's traded below the 20-period moving average. The ATR is 70 pips, which means that if we enter short on this candle, it might give a good reward to risk on the daily chart. So we can do that if we want. But if you want to go on a lower time frame, here the sellers, they created this low. If you want, you can wait for the buyers to push a little bit the price. Maybe they're going to make a little bit of a swing formation or the A, B, C, D pattern, and you can enter short at the break of the swing. Here it's something that I teach during private coaching, and also I will include that to the course. And there are many information in trading you can learn here at MarketMinds Mastery Trading Academy. So that's the USD Canadian dollar. say want to learn more trading experience. I think you're on the right channel. Next one, let's check the Kiwi against the US dollar. Here it's a good, very interesting analysis on the Kiwi. So I will walk you through the price, and then of course here it's the swing resistance. We're going to call it R1. So the price makes these impressive higher highs and of course higher lows. So we are in an uptrend. That's confirmed. There are different ways to trade the uptrend, guys. The one way is to directly, for example, the analysis I do on the daily chart, you can do it on the 5-minute chart, you can do it on the 4-hour chart. Doesn't really matter. What matters is to take the trade when you have to take the trade, and to have a plan that you trade, not just blindly trading the market. So After the price make a new high on this time frame, again, we could start looking for long positions. But where? At an area that the buyers will join forces to continue the upward move. And how can we identify this area? Well, we can use moving averages because the market, when the market is actually trending, the moving averages are the best indicators to use. We can use trend lines to connect the two successive swing lows, and expected the price to retest the trend line. And of course, the static, as we call them, static horizontal lines, like they're going to act as support, and the previous swing high can that was resistance, now it acts as support. So price yesterday retested this. Let's zoom in a little bit. So yesterday the price retested this area of support that coincides by this trend line, by this moving 20 period moving average, and by the previous swing high. So a trader that was looking on the daily chart and was awake the time actually it's 10 p.m. UK time, could take this trade long. With you could enter, because it's a doji candle at the support, you could enter at the close, stop loss below the low, and you can go for 2 to 1 if you want. It's like here, or you can go for more and retest the swing high, but really it needs a good reward. It needs a good risk management, this trade. Okay, for those who may wonder, the yellow candles, they are bearish candles, and the black ones are bullish candles. Okay, and we use this because this is our colors at MarketMinds Mastery, so we want to be consistent. If you are wondering why do we use these candles. So we spotted a good trade, double opportunity. Next one, Australian dollar, US dollar. Here is the analysis ready for you at this point. And the price is, excuse me guys. So the price, hello Nicole, thanks for joining us. Hello from Algeria, someone said just pass by. Someone says greeting. LQ said the market will change. MT said nice, yes. So Australian dollar, US dollar, the price also in an uptrend. There is a channel that forms the price. Here it's the daily resistance up there, the daily support. Actually, that also consists with a monthly high, previous month's high. Support at 50% FIB, support at 61.8% FIB, upward channel, CH1. The price, the sellers yesterday, they rejected the 20 period moving average, and they barely touched the 50% of the Fibonacci retracement from this low to this high, 100% here to 0%. To see the retracement, it's somewhere at in the middle at the 50. So we are looking to trade long. I'm not looking to buy this daily chart because the price action is not a price action that I trade. I don't trade bearish price actions. if I was about to take this trade, I will be looking for bullish engulfing rather than anything else. If we drop down to the 4-hour chart, is there a trend line can be drawn? There is a trend line, but we need to break above this trend line on the 4-hour chart to look for longs. If we drop to the 15-minute chart, the market already started making higher highs and higher lows. So will the market keep trading higher? Maybe, most likely, as long as these swings lows and swing highs are consistent and the swings lows don't penetrate it, then we won't penetrate it. We might gonna see good directional moves. Okay, everyone, does everyone understand this? Any question, guys? Last year you were more talkative. This year it's like you're still trying to maybe bring your heads around trading. The euro US dollar, the sellers, they stopped at this S1 support, as you see. Actually, dodgy candle, we do expect to see a higher high after. That's what we do expect it, but that's not always what's going to happen. Pretty much on the 15-minute chart, a break above this high. There is a strong horizontal resistance on the 15-minute chart, guys, and please keep that in mind. This high here can cause the price to change direction. It's a strong one, so at this point I'm not going to place any breakout orders. I want to see the price move away from this high and then start looking for longs. So for now, euro US dollar, remember, price is at resistance. The pound, let's check the daily chart. The pound yesterday found good support at the S1 support we already marked, and afterwards it's trying to move higher. This trend line, this upward trend line, consists of these three successive swing highs and 3 touches. That was the tradable one, but this one here, it's not a good move. At this point, really, I'm not looking to buy it. The price is now below the upward trend line. If we extend this trend line, we have to extend it on the daily chart a little bit. So here is what the market shows in this time frame. We might gonna have a break above the trend line, but for now, you guys, please understand the market is below a broken upward trend line. Successive swing highs and swing lows, the market did this and breaks below the trend line, now is retesting the trend line. Don't rush to buy, because the price, yes, on the 15-minute time frame creates higher highs and higher lows, but there is a strong resistance on the way, can cause the price to change direction, can cause the price to move lower, put it that way. explain the USD CAD, USD CHF, another interesting currency pair. The market on the USD Swissy, why we don't see the moving average here? Where is the moving average? Which one was now? Did we accidentally deleted the average? Sorry, that's a 4-hour chart. I was thinking, where are the lines? I don't see the lines. Nicoletta said at this point the advance looks corrective though. Yes, I agree with you. USD CHF, the sellers activated from this last swing, the resistance. The price buyers were on the go, push the price higher, and then the buyers yesterday, they were pushing higher and higher, and at this point the sellers, they created this pin bar here. From a standpoint itself, it is a tradable opportunity on this time frame, and yep, why not? We can capitalize on that. I will just write it on my watch list so we can look for some short opportunities there. 15-minute time frame, that's a good, that's a well-defined descending triangle. Yep. So the break below, let's make a scenario. Let's check the 4-hour time frame. Make sure there are no major supports on the way. So the entry here, the stop loss there, and to take profit somewhere there. That's not a bad idea. So at this point, guys, I will be looking to short descending triangle formation. If the price sellers are coming in, price can break below with maybe a stop loss above here or above there, wherever you want to put your stop loss, and we can go for 2 to 1. Here it's getting activated now. You can keep that in mind if you like this trade, with all the understanding that I'm not here, and MarketMinds Mastery, as well as myself, we are not giving any financial advice or personal advice to anyone. We are explaining the market based on profound technical analysis, and as a certified market technician myself, I use all the tools, knowledge, experience to explain the markets from the market perspective. Okay, not what I think, what I believe, always based on the market's actions. USD JPY. Another good pair to watch is this one, USD Japanese yen. Here it's a resistance that came at the 61.8% of the Fibonacci retracement that came from this swing high to this swing low down there. And the 20-period moving average can be used as a resistance, as well the 61.8 of the fib. So there is a level of confluence at this point, and yeah, maybe on the 15-minute chart, if we find some tradable opportunities. The good thing I see, because we want to go short, right? Now we want to find entries. Here it's the high, then another higher high that is higher than this one. And look at this. The RSI prints bearish divergence. So at this point, there is also this rectangle. If price breaks below here, we can definitely go short. Or for a more aggressive traders, by the way, when I say aggressive, it's not a negative thing to be an aggressive trader, as long as you understand your reward to risk and the market conditions. Traders, they want to short from here, from this swing low. We can go short from there with a stop loss above there. It's not something I will do, to be honest, because this is very low probability opportunity. Either I wait for the market to change polarity and then I will go short, or I will wait for a pattern that it's going to be well defined to trade. Someone says, I see it differently, but appreciate the insight. Okay, guys, you can write on the comments, how do you read the market? How do you see, like other people, like Nicole, give us your ideas. So it's fantastic. HV asked, do you have any offline training course? What do you mean offline? You mean on a floor, in a room, or what do you mean offline, or a book? Let's check the German 40 for the London Open. It's going to be in 18 minutes from now. Yesterday, the daily chart moved lower, break below the support. That support here also broke below and closed below the 20-period moving average with this large seller's candle. On the 15-minute chart, let's say the price now makes this corrective pullback. Let's say from where is the open? It opens somewhere here. Let's say. So during the Asian session, the price corrected. So a breakout below this low point here with a stop loss above there, entry, stop loss can maybe lead to a downward continuation. Maybe, we don't know if it's going to happen, but it's an assumption. Gold. It is, if we read the swings like this, price, it made a new higher high here, but because we have this ABC pattern at this point, but really that's not a clear chart to read. It's not as clear as the New Zealand US dollar, for example, that we see, okay, that was a higher high, higher low, price now retest, so we can go long from here. That's not as clear as the New Zealand US dollar. So I'm not going to look for something to do with the gold. WTI, yesterday it was, I spot a good opportunity yesterday, but didn't last for long. It was this one here. It was this one here, a descending triangle. price broke below, but the room, and that's what I always insist, guys, and to the people that they take the private coaching with me, and I give them a clear trading plan. I don't know if some of you guys are watching this live. Remember that one of our things on the list is, and the most important, and determines if we're going to take a trade or not, regardless if all the parameters apply, it's the reward to risk. How can we make that, if we have the opportunity to make a decent reward to risk on a trade, and if only that parameter is a no, we don't take the trade, regardless if all the technical and fundamental support to take the trade. And that's a classic example with what happened here. And I'm not saying that I knew what's going to happen, or maybe that support will have been break. Okay, I'm very straightforward in trading, but if someone enter at the break of this low with a stop loss above there, they wouldn't have been able to make a decent reward to risk by the time the price touch this support, because after the price touches a support, we don't know what's going to happen. Maybe the price will break below the support, maybe it's going to bounce to the upside. Nobody knows. That's why, as retail traders, we must understand our trading capacity. So today, I don't look to get involved with this one. It's below this resistance. It didn't close yesterday above the 20 period moving average. It's not in an uptrend. Maybe it's in a transition of a trend reversal. Nobody knows. Pound JPY. The price at support, as we explained earlier. Let's see if it's gonna make it above this above this broken trend line, or if it's gonna find resistance. So far, the buyers with the black candles are pushing the price higher. If they're gonna break above the resistance, then yeah, we can look for long positions, but if not, then we need to see a break below the swing low to define short positions. And the last one before we end the webinar, it's the USD JPY. I think we explained the USD. Yeah, we explained the USD JPY, but anyway, for the sake of because I flipped on the chart, let's just check the analysis. Price is rejecting at the 20 period moving average on the daily chart. On the 15-minute chart, sellers, they managed to push the price below this swing low here. Some people might want to initiate short positions. I want to wait for the price to get outside of this consolidation, because that's a 15-minute time frame. And if it gets outside of this consolidation, I will be looking definitely to short the USD JPY. Guys, I think that's all from me today. I hope you enjoy the live. I wish to everyone to have a fantastic, not only trading day ahead, but also a nice day, whatever you do. And yeah, we will be here again tomorrow at the same time with more market information, more insight information. And yeah, happy trading, everyone. And I will see you all tomorrow. Bye for now.